If you're salaried or a business owner in India, you must file your ITR for FY 2025-26 before 31st July 2026. Two critical questions you need to answer first: which tax regime and which ITR form? In the next 4 minutes, exact answers, real numbers, no assumptions. Income earned between 1st April 2025 and 31st March 2026 is financial year 2025-26. But when you file the return, it becomes assessment year 2026-27. Important, this return is governed by the Income Tax Act 1961. The new Income Tax Act 2025 does not apply here. It kicks in only from FY 2026-27 onwards. ITR 1 Sahaj, salaried, income up to 50 lakh. New update, now allows 2 house properties. ITR 2, salary plus capital gains from stocks, mutual funds or property. Deadline 31st July. ITR 3, business or professional income. Deadline extended to 31st August 2026. ITR 4 Sugam, small business under presumptive taxation. Also 31st August. Missed the deadline? File a belated return by 31st December 2026. Penalty: 1,000 rupees if income is below 5 lakh. 5,000 rupees if income is above 5 lakh. The new tax regime is the default. If you do nothing, you are automatically on this regime. 0% on income up to 4 lakh, 5% from 4 to 8 lakh, 10% from 8 to 12 lakh, 15% from 12 to 16 lakh, 20% from 16 to 20 lakh, 25% from 20 to 24 lakh, 30% above 24 lakh, plus 4% health and education. Cess on the final tax. Biggest benefit, Section 87A rebate gives you 0 tax if total income is up to 12 lakh rupees. Salaried employees also get a standard deduction of 75,000, so your effective 0 tax limit is 12,75,000 rupees. The old tax regime requires you to actively opt in when filing your ITR. The slabs are higher, but you get powerful deductions that reduce your taxable income significantly. Section 80C, up to 1,50,000. PPF, ELSS, LIC, EPF, NSC, or home loan principal. Section 80D, up to 25,000 for health insurance. Up to 50,000 more if your parents are senior citizens. Home loan interest under Section 24B, up to 2 lakh rupees. HRA exemption if you live on rent. NPS under Section 80 CCD, extra 50,000 over and above the 80C limit. Standard deduction of 50,000 is also available. Total maximum deductions possible, approximately 6 lakh rupees or more for the right taxpayer. Here is the simple rule that works for 95% of taxpayers. Income 12 lakh or below, choose new regime. You pay 0 tax, no calculation needed. Income above 12 lakh, compare your total deductions. The break-even point is 3,75,000 rupees. If your deductions are less than 3,75,000, new regime saves more tax. If your deductions exceed 3,75,000, old regime saves more tax. Real example: income of 15 lakh with no deductions. New regime tax is 1,05,000. Old regime tax is 2,62,000. New regime saves you 1,57,000 rupees. Same income of 15 lakh with 4,50,000 in deductions. Old regime drops to approximately 70,000. Always calculate both. Never assume. For FY 2026-27, same slabs, new act, new section numbers, same benefits. Section 80C is now Section 123. Section 80D is now Section 124. The limits and benefits are exactly the same. Inform your HR about your regime choice before April 2026 for correct TDS deduction. Say nothing. They apply new regime by default. Business owners wanting old regime, file Form 10 IEA once before the due date. To legally pay less tax, under old regime. Max out 80C, buy health insurance, take a home loan, add NPS contribution. Under new regime, ask your employer to include employer NPS contribution under Section 80 CCD2. This deduction is allowed in new regime. Also ask your CA to restructure salary to include allowances. FY 2025-26 return. File as AY 2026-27 under Income Tax Act 1961. Deadline 31st July 2026 for salaried. Choose your ITR form based on your income sources. New regime is default. Zero tax up to 12,75,000 for salaried. Switch to old regime only if your deductions exceed 3,75,000. Use the free income tax calculator at incometax.gov.in. The best tax decision is one you calculate, not one you assume. Share this with every taxpayer you know. Subscribe for accurate financial content every week.